how would this new tax affect the monthly revenue of small businesses? How do they simplify the calculation of these taxes, and would it start to increase their costs, or what would it look like for small businesses?
Okay, for small businesses, what they simply have to do, we've spoken about get keeping records, identify what your revenue from your business is for a period, January to December, calculate all your income, show all your expenses as well. Because it's one thing, it's very easy to trace income, but to now begin to identify expenses can be difficult, and especially when you are not so good at record keeping and you are mixing your individual transactions with that of your business, right? So once you're able to clearly delineate what belongs to the business, right, you look for what part of that revenue is exempt from taxes, okay? And a good example is, like I told you, investments. If that business, you use the spare cash to invest in federal government bonds or state government bonds, you have to back it out, okay? You have to back out such. So by the time you arrive at your taxable profits, if there was any deduction, maybe you paid pension, you paid some pension, voluntary pension contribution, you're allowed to take deductions for those. So whatever, and you have your rent also, you take a deduction for your rent. So whatever you have left is what you would now give to yourself, right? You would now give to yourself, or you plow it back to your business, okay? Or you give it to yourself. Whatever you have left is what you now use that tax band, right? You calculate that tax band, the first 800,000 zero and the likes, the next 2.2, 15. So once you've done that, you have to now go back and you have to go and file. But on a monthly basis, because these calculations I've told you using this graduated scale is an annual calculation, you just have to divide by 12. You have to prorate by 12. So once you are done prorating by 12 for the first 12 months, by the 31st of January, you should have known what should be the actual, if you have employees, if you are doing this for your employees, what should have been the actual, was there a place where there was an overage or a shortage? Okay. You just have to align by the 31st of January for your employees. But if it's for you as the owner of the business, you go and report your affairs 90 days after 31st of December, which will then become 31st of March. You go and report yourself. But on a monthly basis, you have to prorate on a monthly basis, okay? Then apart from that, as a small business, you would definitely have the requirement to withhold, right? If you are paying vendors as well, you have the requirement to withhold. So on a monthly basis, you have to be remitting withholding taxes, okay? If you've opted out of the incentive given to small businesses, remember I said small businesses, you don't have to file VAT returns. If you say you want to file VAT returns, then you can go ahead and file VAT returns on a monthly basis. But one thing I must say is that if you want to enjoy the incentive as a small business, if it then gets to a point where you observe that your turnover has moved from, or you suspect, your turnover has moved from 100 million. So let's just say as a small businesses, by 6 months, you've already done over 100 million. You have to now start complying with filing of VAT returns because you are no more small.
So what kind of tax do I pay as a small, medium, or large business? Okay,
so for small businesses, it is the individual that will be taxed, and it will be taxed based on that band we discussed. But if you were a company, small company, you won't pay taxes at all. The taxes that we have are for companies. We have the company income tax, which is 30%. We have something called a development levy, which is 4%. Even though the base is different, it's 4%, okay? If you are small, you won't pay all that. You won't pay the company income tax, you won't pay the development levy, you won't pay VAT also. Most of the taxes, you won't have to pay them, yeah.
So if I'm a large business, what's my rate?
So if you are a large business, you will now, if you are a large company, because we've talked about the business, the individual, right? If you are a large company, your rate is 30%, right? 30% of your taxable profits. But like we said, there's a provision to allow the government to reduce it from 30% to 25%, okay? That's called the company's income tax. There's something called a development levy. Development levy is 4% of something called an assessable profit. So there's a 30% company income tax,
and then
4% development levy. Then if you probably dispose of a capital asset, it can be maybe a laptop or any other chargeable asset, the rate is still 30%. It will still be 30% on the gains from disposal. That's correct.